So, welcome to the first episode of VA Money Matters. I appreciate you guys coming to see me. And today I just want to talk about a few different things that I wish I knew earlier on in life as it pertains to finances. All right, so a little bit of background story on myself. I got in the workforce at 18. Well, I got the good job at 18. I did work fast food with a worker's permit at 15. I worked fast food, and then I got a good job when I turned 18 and graduated. I didn't go to college. I went straight to the workforce, which allowed me to make money, and it allowed me to make decent money because I got a decent job with a decent reputable company, which is very important to me. That was my goal. Go to work for the construction company that everyone, worked at and really flourished. I knew that people that worked at this specific place, the employees were able to buy houses, were able to buy cars. They were fine if you retired from there. It was really a good, lucrative place, and it still is. I still work for the company. But what I didn't know how to do that early on, being that I got a great job right out of high school, went there at 18, I didn't know about the different ways I could invest my money or put away my money so it really made a difference. So I would say from the age of 18, 19, 21, definitely 21, 22, 23, I was wasting my money. But if I would have known about these certain different investment vehicles, I probably would have put my money there. And I'm gonna explain to you guys a few of them that I learned about later on in life. So right off rip, I would say that the stock market is one of them. I didn't learn about the stock market till I was 30. And when I say learn about it, I heard talks of, stock market, you think some guy in a tie, on Wall Street. But of course, COVID happened and everything opened up to people. Like, people had time to actually look at investing platforms and actually get in the markets, and we had this whole rush of investors. I would say I was one of them. But my thing was, like, why didn't I know anything about it before 30? Right? And it goes back to what I was saying in the intro video. The conversation wasn't started with me. So no one ever started a conversation on how to build wealth in this way. Before that, I just knew about saving money. Now, I didn't do everything completely wrong at the early age. I was able to buy my first house at 18. And I did that because I used to save my money a whole lot. I was one of those kids that, I didn't want to do a whole lot. And if I got money, I would save it. I was save it. I had a decent savings account because the birthday money I used to get, sometimes lunch money I used to get. I really was big on, like, I'm going to keep my money and I want to make something out of the money that I have. And that money was saved for a while, and I was able to have a down payment on a house, because I had that mindset early on of saving money. But that's all I knew. So I knew, set it up so you can have a little bit of money drafted to your savings account over and over, which is fine. There's nothing wrong with having a little bit of savings in the bank. But what I didn't know was that I could have had my savings making more money than it was in the savings. It's no secret that interest rates with a bank are really low. You aren't going to get a whole lot if you're just having your money in a simple, regular, normal savings account with any of the big banks. The interest rate is low. You guys can see that. If I would have invested that money instead of letting it sit and really not accrue a whole lot of money, I could have potentially, of course, stock market is risky, and a lot of different investments do have risks associated with it. But I think I would have took that risk. When you're young, that is the ample time to take risks. Why? Because you have time to make money back. Someone that is in their later part of their life, 60s, 70s, things like that, you don't want to be risking your income because more than likely you're on a set income for the later years of your life. But at the beginning, in the very beginning, you have room to make mistakes. You can lose something and gain it back because you are able-bodied. Young people nowadays, oh my God. Young people nowadays, if you don't have the amount of money that you want, I don't understand why you're not getting it, right? Nowadays, you have so many work from home options. You can have 2 and 3 jobs, and really they can all be coming straight from you sitting at a desk in front of a computer, you working from your phone. It's so many different ways to make money out there now. So again, when you're young is when you should play a little more risky when you're young, because later on in life, you don't want to take those risks and you don't want to be, disabled and you're still trying to find a job because you don't make the money that you need to sustain yourself, right? So while you're young, you should be out there trying to get it. But let's get back on topic. So I didn't know that I could have invested my money and things like that. I learned about it later, but I was kicking myself. You can't go back in time. But if I could, and if you're young and you're checking this out, make sure you at least check out investing vehicles. I'm not here to advise anyone what to do pertaining to their money, but I am here to start the conversation. If you have heard about the stock market and you have money or you want to get into it, you should go look it up. Everyone has Google in the palm of their hands. If you have heard about retirement plans, Roth IRAs, you should go look it up and see if those vehicles can really benefit you. If you start early, you really can make out great. Prime example, I didn't know about the stock market, right, until I was 30. But, with the knowledge I have, my legacy, I really started something new with my legacy. And I say that because I have 2 boys and they have stock market portfolios. You hear what I said? They got stock market portfolios and they aren't over the age of 6, either one of them, right? So those are the ways that a lot of people build wealth because they know about these things. So now I wish I would have known again about the stock market, but now that you know, and you know that vehicle is out there, maybe you should look into it and see if you could take advantage of it. I'm all about investing. Me personally, I don't know if you've seen any of my other content, but I really love dividend investing. And I like dividend investing in dividend aristocrats and REITs, companies that you can almost, nothing's guaranteed, but you can almost guarantee a decent dividend return. Like I said, aristocrats and REITs, real estate investment trusts. Those are mainly the places that I really like to invest my money. My retirement plan, if things go my way, is a little different than the typical retirement plan. And maybe in a later video, we can talk about that. But I want to retire and have passive income coming to me in the form of dividends, so I don't ever have to lose the value of my account. I could just keep ranking in dividends. Of course, you're gonna have to have a decent account, but again, anything's possible in today's time. So that's one, investing. I wish I knew about investing in the stock market. 2, I wish I knew early about this whole idea of becoming your own bank. Your universal bank, is that what it's called? We'll talk about it later in another video, but I wish I had known about this earlier. And what it is, so let's say you have something like a 401k and you can have that through your employer, or even a whole life insurance policy, right? While you invest in these vehicles, you can reap the benefits of having these vehicles. A prime example is a 401k. A lot of employers offer the ability to borrow from your 401k. Once your 401k is a decent size, you can really be your own bank. For example, if you want to finance a car, You can borrow money from yourself by borrowing the money that's in your 401k and not take any hit to your credit because you're borrowing from your own money. And the best thing about that is when you do that, your investment continues to grow. Your investment doesn't stop growing. So you're borrowing it. And again, it's still making money because you are with a company or whatever, and they are footing it so you don't have to move things around too much. And they're giving it to you, and you have a loan, and you're paying yourself back. And typically, these rates on borrowing from your 401k, typically, not sure whatever the economy doing at the time, typically the interest rates are less than going out there and getting a loan from whomever. So you really can be your own bank. And that's with a 401k. You can do the same with a whole life insurance policy, right? You could pay that. The difference between the two, of course, a life insurance policy is what it sounds like. It offers a death benefit. That's the difference, of course. And some life insurance policies do allow you to invest into different things like universal life. It allows you to invest in a slew of different investment funds, but you can do the same thing that you did with your 401k. You can have a policy that has a cash value that grows through the duration of the policy. And with that cash value, you also can borrow money out. That's awesome, right? Of course, these vehicles are for different things. 401ks for retirement. Whole life insurance gives you a benefit, a death benefit, but you also can use the cash value in it to be your own bank if you grow it large enough. I wish someone had told me about that early on. Instead of going to get a home loan, depends on what the price of your house you're trying to get is, you could borrow a substantial amount to almost pay your house off if you have, grown that 401k or that whole life insurance policy. If you have grown it big enough, you really could, do a lot of things. And imagine that, going to a house that you want and saying, yeah, we're just gonna buy this in cash because you already took the money out and got the money from your 401k, if it's decent, and just go ahead and pay your house off. Things like that. The potential of these investment vehicles are really, really limitless. So that's two things I wish I knew about. And that's investing in the stock market. And two was being your own bank through 401ks and whole life insurance. And the last one is kind of deep, but it's something that I do think needs to be said. I wish someone had told me about the benefits of building wealth through life insurance. And what I mean by that is, I'm a man, and one of the things that we as men like to do or want to do is to leave our family in the best financial situation possible if anything happens to us, right? That's called leaving a legacy or building wealth. That's what a lot of men are out here chasing. That's what we want to, really leave behind and make sure that everyone in our family is taken care of. You can do this in the form of life insurance too. I know it sounds a little morbid, but let's say something did happen to you. Are you leaving your family with a heavy mortgage? If you're leaving your wife with a heavy mortgage that she can't pay by herself, now something has to happen. She got to sell the house or something like that. Are you leaving debt, credit card debt for your family to deal with when you leave your spouse? Things like that. Or are you, if something were to happen to you, will you leave a blessing behind because you had that policy? So yeah, something might happen to you and, it'd be sad, but you can leave with that satisfaction of, yes, I left my family well off and they won't be struggling because of something I left behind. That is a ultimate way to build wealth. I know so many people that don't have life insurance policy. So let's say someone passes away. When someone passes away, it's just a sad time. I've seen people have to, move out of the home they were in forever because they no longer can pay the bills and things like that. But if you have life insurance policies and things like that in place, or you could have not even just life insurance. I'm not saying that just because I'm a life insurance agent, but let's say you have a 401k. If you got a fat 401k, people will be able to survive without you, because, you are leaving and that household won't have that income anymore. Things like that. I never really thought about that until I learned about, the benefits of having policies in place. That is really important. And oftentimes people don't have those things in place. And when they don't have those things in place, sometimes some suffering happens even after they depart. So again, I wish I had known a little bit more about life insurance policies and things like that, or at least making sure that, you have small policies that, no one has to move out the home if something happens, or just things like that, because I see it happen often, way too often, that, people can't afford what they were living because something happened, something tragic happened. But again, as men, we want to make sure our family is good. So, you got to have those safety nets in place so your family can still, keep moving. But those are the 3 things that I wish I had known early on. Investing in stock market, dividends. I love dividends, but investing in the stock market and dividends. 2, understanding that you can be your own bank and you don't have to ever really go take out loans if you put your money in the right places, and you can borrow from yourself. 3, life insurance. Again, you want to leave your family with a peace of mind, and you can build wealth off that. Again, a lot of times we're running to get it. If you fall by the wayside and don't really attain it, you really could help out the next generations by, having certain policies in place. But that was just a quick run through of the things that I wish I had known. I hope this video was helpful for you, and I hope this video starts the conversation about these things. Again, I learned about a lot of these vehicles and a lot of these policies and a lot of this financial literacy age 30 plus. I could only imagine what I could have done with this information at age 18, at age 16, or earlier than that, because the next generation, you guys already know, they're going to be on it. So it's our job, our duty as the generation before them to make sure that they at least know about these vehicles, and we can start the conversation about financial literacy. I'm Ty, signing off. Peace.